Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your StockMiner Brian Johnson. Sorry I didn't get a video out to you guys last week. I was in Florida with the family all week long. We had a blast. Flew out last Monday and then got back to Rapid on Sunday, where we spent some time at, for any of you that are down in Florida that might be watching the videos, we spent some time at Busch Gardens on Tuesday. Wednesday, Thursday, Friday, we were up near in a place called New Smyrna Beach, which is just south of Daytona, because my in-laws have some condos there. They go every year to watch the Daytona 500, and then we went to Universal Studios on Saturday and got to check out the new Harry Potter ride and stuff, which was really cool. They did a really good job of it. For those of you that have ever been on a roller coaster type thing, you know that if you can, the best place to sit is always in the front. If you can get on the front line of the roller coaster, you have the best seat in the house. Especially true for rides like the Shikra at Busch Gardens in Tampa, if you guys have ever been there. I love that ride. Anyway, the front is always the best place to be. Well, they've designed this particular ride so you don't ride behind one another, you ride beside one another. So every seat is a front row seat per se. There's nobody blocking your view in front of you, and you get the full effect. It's really cool. They did a great job. I was very impressed. We got there early and was able to get in maybe a 20-minute, 30-minute wait, which is really, really good because later on in the day it was a 60-minute wait. But they shove them through, and they did a really, really fine job. Very happy with it. Anyway, back at it, and looking to do a quick video for you guys, update you on where we went. Now, fortunately, being gone last week means I didn't miss anything. Oh, it was so bad. And it really hasn't gotten any better this week. So we still are continuing our slow grind to the upside. Here in front of you, you see the really kind of what we're looking at. This is a very wide channel, but it is kind of where we're stuck at the present time. You can look into this in any way you want to. From an Elliott wave standpoint, the point is we are nearing a top. A lot of people have been preaching about it. I've even been talking about it the last couple weeks. But we really are nearing this topping process, and it takes a long time for this topping process to work its way out. But it's not a matter of if, it's just a matter of when. And, you get a couple of good, strong days of the downside, it'll be pretty obvious when that time has hit. But until then, you just have to use a lot of patience. You have to be very, very careful with your trading. You just have to be very selective. What I've been suggesting that people do is if you want to go long, what you want to do is go ahead, go long, but you want to be able to manage that trade. And I'm not real fond of holding overnight, especially anything that's ETF related. If it revolves around the indices like the SPY or the DIA or any of the FAZ, FAS, all of those 3-time ETFs that people love to play, any of those, I don't recommend, the holding long thing for any length of time. You just have to be very, very careful. You don't want to wake up one morning and the markets are down 10, 15 points. And what we've seen lately is that when we have gap down, it's just an opportunity for the bulls to buy, and they're just screaming it back up again. So you've been dodging the bullet if you've been living through that. But eventually you're going to wake up, and that's not going to be the case. It's not going to come back, and you're not going to get stopped out, and it's going to be a bleed on you. So don't be that guy. Just be very careful with any of the long trades that you're taking. Make sure you manage it. The only one that's really been safe lately, in my book anyway, is Apple. I love to play Apple, and I cover it every day in the subscribers newsletter, and it's been a monster. I was making calls back at 398 and 400 to go long, and now it's 535 or something ridiculous like that. I mean, it's been an incredible run by Apple over the last 2.5 months, but that has not been indicative of necessarily the entirety of the market. So you have to be very careful with any and all long positions from this point forward until we see that pullback whenever that happens. Okay, so be very careful with that. Still a little bit more risk just going long and letting it go. Even though we have now closed, and this is important, we closed above the 13,000 mark in the Dow, which was a huge psychological barrier for a lot of people. You'll probably find the papers taunting and talking about how, Dow over 13,000, now's the time to get into the market. 14,000, 15,000 by the end of the year. I don't know if they'll say that, but somebody I'm sure will, because somebody out there is mega bullish. Anyway, the point is, Don't get sucked into that, okay? Read what the charts are telling you and follow what the charts are telling you. Don't be drawn into the mass hysteria that is sometimes caused by this constant grinding bullish action that you see over and over and over again. We are very extended up here. That does not mean that we can't extend for another couple weeks, 2, 3, 4 weeks, who knows? I'm saying that we're not making a lot of progress. If you go back and look at where we were even after like the first day or so of February, you can see we were at about 12.8, 12.750. I think that's fair. And now look where we're at. We're only about 250 points up from that, and that is all month. Tomorrow is the last day of February, and we've covered 250 points in the Dow in a month. Come on. That's we do that in a day. You know, when the markets really get moving, we'll easily do that in a day. It's not that much. So you want to be very careful to the long side. They are grinding it upwards, but they are grinding it upwards. It's been very difficult to make any money if you've been really bullish in through here. All right, moving on. So the video doesn't get to be 30 minutes. Let's breeze through this really quick. You're watching this channel very, very closely. If we can get back below this 12.7, 12.750 mark, you've got something to look at now from the short side. Or if you're long, you want to be covering down in that area and being very cautious. So make sure on the diamonds or on the Dow, what you're going to want to be watching is this 12.8, 12.7 area. This is big down here to retake for the bears. Anything back down and below this area would give you an opportunity to either A, exit some of your long position, or B, maybe look at dipping your toe into the waters with the short position, especially if that comes on in a very strong way. I would expect to see a pullback happen, something in this fashion, or maybe we see 2, 3, 4 good, strong days of downwards momentum. So watch this area very close from the Dow aspect. The NASDAQ, also a monster in and to itself. And a lot of it has to do with the fact that, Google, Baidu, and especially Apple have been really pulling this thing up. The NASDAQ is typically the strongest, but in this case, it's extremely strong. Want to be very careful to the long side here. We are hitting some overhead resistance areas up in these upper areas of 2640, 2650 area, so you don't want to be too comfortable with any and all long positions you might be in. I'm not trying to chase you out of them or anything like that, but you want to make sure you have stops in place and that you are managing any and all long positions. Even in the NASDAQ, even as strong as it's been, it's still you got to be very, very careful in through here. I don't have any recommendations for you to the long side, but if we can clear this 2560, 2550 area, now you've got something to look at from a shorting position. That would get you back into this area here, right back down into this 20-day moving average. These are all the things you need to be watching as we push forward. Look at this huge run we've had. I talked about the Santa Claus rally back in this area. Very common. Usually you see it right before or just after Thanksgiving, and that's when we did. And it's been nothing but straight up since the middle of December. Look at this. Just huge moves in the markets. So, as I said, no reason to think it can't go a little bit higher, but you must be very, very cautious with any and all long positions that you might be taking at this point. From a weekly perspective, same type of story here. Yeah, volume hasn't been great, but at the same time, I wouldn't worry about that quite yet. Let the market do what it's going to do and see if it'll just wear itself out as it runs itself to the upside. SPX on a 60-minute doing the same thing. Not near as strong as what the NASDAQ is, but you can see this lower line really holding beautifully so far. And this is by far the area to be watching proceeding into the end of the week and even over the next couple of weeks. Options expiration is coming up. That's third week of March, as it is with every month. But point being, it wouldn't necessarily blow me away to see us pull back up, and grind our way upwards, maybe even through March options expiration. It seems like a long ways away, but maybe. I mean, think of how many puts you would bleed out if you could run this thing up. Everybody's got to be bearish on this thing, and if you have a smaller account, you're probably buying puts like crazy, hoping it'll reverse at any time. And for your sake, I hope it does. But the market could bleed you out by just grinding this thing to the upside and never allowing it to make any money. So we want to be very cautious of this. 1350. that's my area. You really want to watch that closely on the SPX. That'll coincide also with this 20-day moving average, and you can see the big run we've had in this as well since the middle of December. The VIX staying between the 15 and 20 area. That's my complacency area. We've been there and been stuck there now for quite a while, so there's still pretty good complacency in the markets. If this thing starts to dip, that probably means a rise in the markets. But watch for this thing, I would think, to hold between 16 and 18 until that big break happens, or I should say the pullback. When the pullback happens, this thing should spike and spike pretty hard. Not sure how high we'll see it go, but I would definitely think we'd clear 22, 24 in any kind of a pullback type scenario for sure on the VIX. From a weekly, consolidating perfectly well within the 15 to 20 area that I've talked about. This is a really good illustration of complacency. Market's just not real concerned right now. FAS on a 60-minute, FAZ on a 60-minute, of course, all stuck in a big consolidation. I really like this one back above the 93.50 to 94 mark, and I like it back below 86. It's a wide margin, but in this market, you got to be very cautious. As you can see, it's really hard, crazy runs, both to the short side or both to the downside and to the upside in some of these scenarios. Now, if you want to day trade it, this is a great one to day trade because it's bouncing beautifully between these areas. If you want to swing trade it, you definitely want to wait for breaks of these areas before you make a move one way or the other. Here it is on a daily, and you can see that high base consolidation. I'm going to consider it a high base consolidation until otherwise proven, but as it is right now, it's holding very nicely to this upper end of the spectrum. So once again, that break above 90, 93, I guess 93 and 80, I don't know, still probably 85, 86 for me to the short side on FAS. FAZ then, of course, being pretty much the same, a little bit different. This one has kind of a channel as it's channeling downwards here. We're having very good luck with it bouncing and bouncing and bouncing and bouncing and bouncing off this lower blue line. Hence, if we get back into this area, I would probably expect it to, I don't know, bounce off this lower blue line. So I'll be watching this very closely too if there's any pushes down and below 25. Now that still allows for a little bit of trading. If you want to day trade this thing to the short side, that'd be great. But if you're looking to do any kind of longer term trading, you really want to wait till we break this 26, 27 area. I'd probably say 27 is more conservative on this particular stance. It's only $2 away. But any break up and above 27, by far the more conservative place to look to go long. I love that we were in this falling wedge. We could be playing this thing out as long as it holds to the top side of this blue line. We could see a very nice move in FAZ. Once again, it's not a matter of if, it's just a matter of when. Just a matter of when. Okay. I think that wraps it up. Yes, it does. All right. That's it for today's video, guys. I'll try to get back to you again later on this week if we get any real movement. If we don't, nothing else to say, really, to be quite honest. So we'll see if we get some real movement. We've got some GDP numbers coming out. Keep in mind that the market is absolutely shrugging off any and all bad data. That durable goods data that came out today was a crusher. Really was. The worst in, 3 years or something like that, and well beyond expectations. They expected like a 1% decline. Now, if it's 1.2, 1.5, okay, you can kind of recover. You kind of think it's not so bad. We're close enough. But 4, that's huge. That's a huge deviance. So markets didn't seem to care. A little bit of a push down, and then at the beginning of the day, they dropped a little bit before running it straight back up again. The bulls were like, we don't care. So just keep that in mind. So we don't want to fight the bulls, but at the same time, we want to respect the bears and their ability to really take charge once they decide that they really want to. So be cautious with your longs. I'll be back with you later on the week if something major happens. If you enjoy these type of videos, sign up for the new newsletter. $1 a day, $20 a month. Well worth your investment. I do one every single day except for Saturday for the subscribers. I go into a lot more detail. There's a lot more lines, a lot more detail, a lot more entries and exits, target prices, what I'm seeing, Elliott wave, gold, oil, stocks, just a lot of extra content within the subscribers newsletter. Trading room for any of you that sit around all day doing nothing but like to trade. We have a trading room. that you can sign up for. My mentoring courses, that's coming right into full season now. It's cold outside, there ain't nothing else to do if you live anywhere up north. It's a great time to prepare yourself for that next major move. This is really a college level course that prepares you for the ins and outs of trading as a whole. And that doesn't just include buying and selling. That has to do with we go over options, we go over Elliott wave, we cover all kinds of things, but we get behind the theory of trading, which is so very important. When you know why you're doing what you're doing, it's so much easier to make decisions in your trading. So, can help you with that as well. We got another new product coming out. I can't speak a whole lot of it, but once again, happen to have some extra money laying around the house that maybe you'd want somebody else to manage. Oh, I don't know. I can think of someone that might be able to do that for you now. So putting all the paperwork together on that, but if you're interested, give me a call or write me and we can discuss that. Otherwise, we'll see you maybe later on this week.